Good morning, everybody. Welcome back to the morning market mixer from TradeThirsty. We're going live with this slot every single day, Monday to Thursday at least, for the whole of March. So for you guys that don't know me yet, my name is Russell Barbour. I started trading about 12 years ago. I was in a lot of student loan debt, working in Seattle, Washington, and tried to make some money trading the markets. So like a lot of people, I lost a lot of money pretty quickly. I lost about $20,000 chasing the market, trying to trade penny stocks. And it was a real struggle for a few years. I spent a lot of time over trading, oversizing, trying to be right, and really finding that that wasn't the key to success. My turning point actually came a few years ago after a lot of trial and error, where I found that I could be consistent using mechanical rules and very disciplined with an actual intraday SPY 0 DTE options approach, which is pretty unusual because this can be a very high risk, high reward style of trading, as you guys probably know. So I focus now on just one quality setup per day with very well defined entries and exits, and really focusing on strict risk management. So being very careful. Today I'm going to talk about a bunch of different things about the market, and we're going to use TradingView as the main charts and platform for these charts, the most popular system out there for this. We're going to look at some earnings. We had an earnings release today, which might affect the market a little bit, and we're going to use Earnings Hub for that. The SPY levels come from two places, barchart.com, and also my proprietary indicator levels that I have as well. So we have a cheat sheet. It's at tradethirsty.com/MMM. You can scan the QR code on your screen right now if you want to get this cheat sheet, and we're going to go through it like we usually do. I'll also post in the chat here the actual URL in case you want to use the actual URL to get to the cheat sheet. So it's in the chat right now for you guys who want to go and get the cheat sheet directly. So I'm going to go through the cheat sheet very quickly here before we start looking at the market and what's going on in the market today. So for you guys that don't know, 0 DTE trading stands for 0 days to expiration. So these are options that expire the same day. So it's all intraday trading. And really, we can capitalize on short-term price movements within a single trading session. And so unlike longer dated options, 0 DTE contracts do lose value pretty quickly due to theta decay, so the premium will decrease. And so it requires like precise timing, good momentum, good clear market structure, and a clear market direction in order to profit from these. Also, typically you're only in these for a few minutes to an hour or so. Any longer and you start to get theta decay starts to really kill things off. So my strategy focuses on being quite quick in and out the market, just a quick scalp. And that's pretty much what a lot of people do to capitalize on these 0 DTE trades. So they're traded on SPY, that's what I do. You can also trade them the Qs. And anything that's very liquid and has these 0 DTE options. I like SPY because it has 0 DTE options every day, and it's one of the most liquid ETFs out there. And that's a really important. Liquidity in 0 DTE trading is very important, so you get good fills because it can make the difference between a profitable trade and a losing trade, depending on how tight the spreads are, and making sure you get fast order execution. With these types of trades, risk management is absolutely essential. You want to use smaller positions than normal. You want to have very mechanical rules, very well-defined, predefined stops, and take profits so you can do this without the emotions getting in the way. And it can be very emotional because of large swings. So here's an overview of the potential benefits. You can use lower upfront capital. You can do higher leverage because the contracts move so fast. And basically there's frequent daily opportunities on SPY. You have to be quick, so the rapid time decay. It's a double-edged sword, right, with the price swings, so you can get fast losses pretty quickly too. We aim to really minimize those using a really mechanical approach. And also the emotional decision making is like amplified because you're under a lot of pressure because of the time decay from the contracts. So the strategy we're going to look at today, and this is the one that I trade every day when there's an opportunity, is a SPY 0 DTE using the opening range breakout. So I start preparing for this about 15 minutes before we go live here. And it's about the right time for me. And so I look at the previous day highs, the previous day lows, look at VWAP, key resistance and support. I look at the news and the opening volatility. I mark up the opening range for the first half hour. just by drawing lines. You'll see that in a little bit here from the high and low of the full candle wicks, and looking for a breakout from the opening range. So that's really all there is to it. It's a very simple strategy, but it's very effective. And let's continue down to the bottom here. So yeah, hopefully you guys can go through this sheet, and let's continue with the slides here so that we can get to the actual market data. So again, just scan the QR code or check the chat for the URL. A quick overview of SPY. You guys probably know this already, but for completeness, it's an ETF, exchange traded fund. It tracks 503 stocks across the sectors. It tracks S&P 500 basically. It was the first ETF launched in 1993, and it's #1 for liquidity. So this is why we want to trade SPY. It's why I trade SPY. It's why thousands and millions of other traders trade SPY every day. So today, agenda is basically what it is every day. We're going to go through my SPY ATM alert recap. This is a single trade that I do at 10:30 Eastern time every single day. We're going to go over market news, any earnings and data that's coming out or came out. We're going to look at the market direction using the opening range breakout and VWAP. We're going to look at key intraday levels in SPY. We're going to look at the expected move and volatility, and then take any trade opportunities that present themselves towards the end of the session. Kind of hard to time the trades here, but hopefully the analysis I do will help you guys take a trade on this if you want after the session finishes as well. Often the move presents itself quite soon after, so that's what we saw yesterday, at least. So SPY ATM is a service that I offer. It's a premium service. It comes out at 10:30 a.m. Eastern time daily, and it's 0 DTE on SPY. And yesterday was a call alert. You can see on the left here, it comes out in the Discord chat. And so you can see it was a call alert when SPY was at 677.62, and it was the 677 strikes, 0 DTE strikes on this. Entry price at 248, take profit at 297. And you can see on the right here what actually happened. The white arrow actually marks the start of the trade on this green candle at 10:30. And then you can see that we had a really bullish run after that. And we're just looking for a quick scalp. So this is the 1 minute chart. It's about 6 minutes in the trade. And it was a 20% win. I call this 20% in 20 minutes. Usually it's shorter than that, but it's usually within that 20 minutes that you get the 20% on the SPY ATM service. And so it went really well yesterday. It was a good way to start the good Tuesday, basically. It wasn't the start of the week. I guess I'm a day behind. So yeah, it's Wednesday today. All right. So today's news, the big one, CPI came out this morning. It didn't have much of an effect on the market. It sort of spiked a little bit like it usually does, and then it sold off just a little bit into the open. But really, it didn't really do a whole lot to the market. So, and it really didn't. And of course it can, and it does matter for SPY. A cool CPI is bullish. You can get rate cuts sooner. A hot CPI is bearish. Because you have higher rates for longer. But this CPI announcement basically said inflation is stable. It's not accelerating from February, and the markets generally saw this as neutral to slightly positive. Even though there was a slight sell-off, it's kind of a neutral to slightly positive result. The other news, US-Iran conflict, it's continuing to drive big swings in oil, which obviously impacts inflation expectations and can affect equities as well. Really, there's no major news out of that so far. That's why we're not seeing any crazy moves in the market. It's been kind of quiet for the last day, but that can change at any time, of course. One thing that did happen today was Oracle earnings. So Oracle reported earnings and beat earnings this morning. Good guidance, good forward guidance as well. I think this is probably what's offsetting some of the bearish action that we've seen. Because the strong Oracle earnings does affect things like NVIDIA, and they are reacting to the Oracle results. So that was really the first major earnings that not major, but pretty significant earnings that we've seen since we started this program. So yeah, so Oracle reported. Nothing else is on the radar in terms of major earnings. So let's jump into the actual market here. We'll go to the charts in just a second. This is a quick summary. We're still below the 50 SMA, still below the 100 SMA. We are seeing a classic relief bounce on the daily chart. So let's go back to the daily chart right here. So here's the daily chart. So a couple of key things: below the green, which is the 50, we're below the orange, which is the 100. So we're still kind of in a bearish downtrend. You can see from this February here, we've been in this choppy downtrend. So we are still going down. We had a classic relief rally basically the other day on the 9th here. We had an almost pullback to breaking this line of support, 77 roughly. And so we had this real pull down, but then we had a rally as well. So we've had this relief rally up here. And now we're kind of in no man's land again. Yesterday we had kind of a doji candle almost. And today we've had a pretty tight opening range breakout on the daily chart here. So really we're kind of in no man's land. It's looking like we might bounce a little bit more, but we'll see what today brings. So let's drop a minute here and start looking at the opening range. So here's the 30-minute chart. You can see the first 30-minute candle I marked up here. So that's for the top of the 30-minute, the bottom line for the bottom of the tier. And this was actually a bit unusual for today. It actually was quite a tight opening range. Typically we're in the 0.6 recently, 0.5 or 0.6%, but today was actually just 0.3. So we actually have quite a tight opening range today. This can mean that we're likely to have a trend day, but of course nothing guaranteed. So really, given this information, you can kind of say, well, if we break out to the upside, like it looks like we're trying to do here with this huge wick that we just saw, then it's potentially an uptrending day. And if we to the downside, it could be a downtrending day. Basically, the tightness of the opening range dictates that potential trend day. If it's a huge opening range, you tend to have a lot of chop, a lot of back and forward, which makes it kind of harder to trade. So yeah, so at the moment we're kind of in the middle of the opening range right here. So I marked up the actual in case that's useful for you guys. So we'll go to the next slide. And 3 for the expected move. 673 is the bottom of the expected move. This is calculated using the at the money straddle about 10 minutes before we went live here. I found that to be one of the most accurate ways to put the expected move for the first hour or so after the open. So you want to let the premium settle down, right? So I give it 15 or 20 minutes to settle down, and then I look at the money straddle for the expected move. Like I said, the opening range is actually pretty tight, 678.5 to 676.16. So it's actually pretty tight. So the VIX is still at 25, at least it was the last time I looked at it. Let's go and have a quick look at the VIX here. So looking at VIX, we are seeing that usual spike that I was talking about yesterday and the day before. We had this spike, and now we're kind of on the way back down here. But who knows what will happen if we get more Iran news? This could spike back up. Although generally, historically, it doesn't. You can see like these previous spikes last year. Usually things settle back down to below 20. So we're still elevated at 25, but we're not in the absolute like fearful, fearing for your lives type of environment. It's settled down a bit. And 25 is not that bad. It really isn't. It's probably quite good actually for intraday moves for traders doing 0 DTE. Hi Ray, I just saw you posted in the chat. Ray B from Ontario. That's awesome. Yeah, so let's see if we can find something to trade. It wasn't looking particularly good there while I was talking, but let's go and look at this in more detail. Switching back to the SPY here. So looking at 30-minute, looks like we might upside, although a lot of sellers did step in there as we had that huge wick opening range. Let's drop down to the 5-minute here and see how that's looking. So you can see we wicked above the opening range here a couple of times. Again, and I say this every day, I wait for a close on the 5-minute above the opening range to avoid situations like this where you just wick out and wick out. So you're looking for a close above that opening range on the 5-minute. Let's look at VWAP, and it's above VWAP, but let's have a look where VWAP actually is. So right in the middle of the opening range, this blue line is the VWAP. So it'll be interesting to see if we get support at VWAP and maybe a bounce back up, or if we break down and look for an opening range breakout to the downside. Right now, it's kind of difficult to take any sort of, because we're really kind of been rejected from that top of the opening range, and we're down towards the middle of the opening range here. So it looked like it was seller stepped in. We'll give it a few minutes and see if we can see what happens here. See if we get sort of VWAP. This can change pretty rapidly. If you guys were watching yesterday, we got a pull down to the bottom of the opening range. It flirted below it, so it was actually a couple of candles did close below it, and then it actually reversed pretty aggressively and went up all day, broke through the top of the opening range and continued up. So it went from looking like a breakdown of the opening range to a breakout and break up of the opening range. So these things can really change in this market for sure. One thing I like to put on it is these SRX levels. It actually saved me yesterday, if you guys were watching. The SRX levels are basically support and resistance levels based on the options contracts for the day. They change every day. And you can see here, this might actually be another day where the SRX levels help. So I'm just zooming in here. So the blue is support, red resistance, and it just happens that the resistance here is in line with the top of the opening range, and the support is actually close to the bottom of the opening range, which is why we're kind of hovering between these two, down to the top of this resistance level here, or support level, and pushed up against the resistance level here. So I find these levels to be really helpful in conjunction with the opening range. And that's what I think most traders do, right, is they use some sort of confluence, RSI or MACD or some sort of EMA crossovers or whatnot, in conjunction with, or confluence with the opening range. Because by itself, it's quite a difficult trade. So if you guys were watching yesterday, this support was actually down in line with the bottom of the opening range here. And that was part of the reason I didn't take the trade to the downside, because of that. So that kind of saved me yesterday. So it's amazing how well respected these levels actually are. Obviously they break, and that's what we're looking for. But you can see that this adds kind of a negative influence to upside breakout here. So we got a few minutes. You can switch to the 1 minute. See if the candles are looking on the 1 minute. So we're back to VWAP, right in the middle of the opening range, right here. So yeah, it's quite a bit of resistance here to get some sort of opening range breakout, because not only do we have to be the key levels, but we also have to beat the top of the 30-minute candle, the bottom of the 30-minute candle as well. So it's not looking very solid for any sort of trade anytime soon, but you guys know that the market can change fast. We could get a really strong sell-off here or rally. So I'm not in any huge rush. Certainly wouldn't be taking any kind of trade at this point, right in the middle of the opening range. Here we go. It's quite solid. I really want to see a strong close above here, though, before I'd consider a trade. If I do take a trade here, I'm going to switch to my brokerage here. I would just be looking at the 0 DTE calls if it breaks the upside. So it's like the 678 at the money calls. They're currently 211. So yeah, I'd be looking at doing those. And likewise, if we get a break to the downside, I'd be looking for something like the 677 puts. So yeah. So yeah, it's good. Usually what happens is I finish the call thinking there's no trade, watch it for a little bit, and then there's a trade. So hopefully it's helpful for you guys, though, marking up your charts. If you're not familiar with this strategy, it's a really basic strategy, but it works really, really well. And often the expected move works really well too. The expected moves are quite far out here. like up here, the top here. I often see it after we finish these sessions, it will go all the way up and really respect the expected move and then come back down. So expected moves as well. This is what you really want to avoid when you're doing 0 DTE, right? This chop sideways in the middle of the opening range or between a major support and resistance level. It's just where theta decay will kill your contract. So you really want to wait for that direction. Anybody got any questions? Ray, do you have any questions? Not much going on at the moment. I'll give it another few minutes and then see if anything interesting happens. Sometimes the best option is not to take a trade, right? Avoiding the bad trades. That would be like a sniper, where you're only taking everything when it's perfect, not forcing anything. Also mark up stuff like the pre-market high as well. That can be useful. So Succession Planning Pro saying, I don't understand how VWAP relates. It relates to what? This type of trade? It's not supported in this type of trade, especially when it's right in the middle of the opening range. It doesn't matter too much. It's just nice to see if it's been respected or not, which it kind of has been. You can see this candle's kind of right on the VWAP here too. But basically, you want to be above the VWAP if it's going for a breakout, and below if it's going for a breakdown. But that's nearly always the case, so it's not super relevant. We can actually take it away here. It's not helping us much at all. Hide the VWAP. There you go. Sometimes the simpler the chart, the easier. I've seen some crazy charts recently with thousands of lines all over the place. So I try and keep it simple. I know this might not look super simple to some people, but really it's pretty simple. Succession Planning Pro saying, I like the sniper analogy. Yeah, it's here we go. I'm going to break down to that key support. Yeah, the sniper analogy is good, which is really the key to success. I found, at least first started trading, I really was keen to get into trades, and that didn't work out very well. So now I'd rather not take a trade and just sit on the sidelines unless, like, basically I'm looking for a reason not to take a trade, like, if that makes sense. All right, let's see if S1 is respected here or if we get a breakthrough. These levels are actually made by my friend. He's a really amazing developer and programmer, and they're some of the best levels that I've ever used for SPY. Here we go. It's a nice breakdown through S1, closed below in the 1 minute. That's cool. So where are we at? 10:24. I'm in Central Time, so at 9:24. So step one is we've broken S1 here. The next step is to close below the bottom of the opening range, the red line. And it's worth following this after I finish for the day. It's worth following it and marking these charts up if you can, and the numbers and stuff when you're sharing a screen like this. But it's worth like following it after we finish and just seeing what actually happened. And it's quite amazing how well these things are respected. You'll often see it just coming along on the bottom of the opening range, then going all the way back up to the top of the opening range. And if it breaks that, I often see it go up to the expected move. All right, here we go. So we're just starting a new 5-minute candle. So I'm going to switch to the 5 minute here. Here we go. So breaking down through the bottom of the opening range here. The problem here is I'm waiting for it. We still have 5 minutes before we'd see a close below the here. So ideally, if we closed about there, I'd be looking to get in on the next candle. But again, you've got to be careful of these wicks. L Slurp Peak is saying I took a winning SPY in IWM EMA trade today. That's awesome. That's cool. All right. So yeah, so I'm going to look at the puts at the moment. I'm not going to enter just yet. Obviously, like I said, I'm going to be very disciplined here and wait for a close. So we'll probably be looking at this. So I'm going to get those loaded up into active trader just in case there's a trade here. During these sessions, since we started a week and a half ago or so, there's only been one active trade that I took just from the timing here. And it worked well. We got our between 10 and 20% within a minute or so. It was nice. Let's see, active trader. Obviously, if you're going to take you're trading at your own risk, can't promise it will be a winning trade. My order is basically an OCO order, looking for 20% profit or 20% stop, whichever comes first. All right, so I have my active trader ready to go with the 676 puts. I'm not entering just yet. Elsler Peak said just took the SPY put. Yeah, it's probably already up by now, but I'm trying to stay disciplined with this. Let me know what you make on it, because I'm pretty sure you already got a few percent with that move down. Elsler Peak. Yeah, it's just the timing again. Like you can see we have S2 down here, so a trade would be aiming for me would be to take down to S2, hopefully pretty quickly. The session might run a little bit long here if I do take a trade. Usually try to be done by 9:30 or 10:30 Eastern time. But it's very difficult today because we've already broken down. We get closer to S2 and then I just sit out because we could see support here to the downside. Just hard to time these breakouts sometimes. You've got to have a lot of confidence there's still meat on the move. And with S2 sitting here, I've not got a lot of confidence that we're not just going to see a bounce back up as soon as I enter the puts. Isn't that what always happens? So 1 minute till this candle closes. I have a sneaky suspicion that's a bounce though. If we zoom out a little bit, you can see how the wick. So I think I'm going to sit it out. If you guys have the confidence though, it might be a downside day on this. I'm going to give it another minute just to see if this closes below or not. But buyers really stepped in down here, and that's what I was kind of a bit worried about. That we'd see a pullback like this, a pull up, even a pullback. Yeah, see that's the risk. We almost tapped S2 and then we're back up to the opening range, and then we're going back into the opening range. All right, well I'm not going to play that. That was too many buyers stepped in there, so I'm not going to play the shorts. And we're too far down to play along here, so I think I'll call it a day at that. Let's just put the final slide for you guys. And so Just a reminder that we do this Monday to Thursday. Hopefully it's helpful. Start at 10 a.m. Eastern time. It's going to be for the whole of March. And you can get that cheat sheet that I talked about earlier at tradethirsty.com/MMM. I'm going to put that link into the chat here for you guys as well. So tradethirsty.com/MMM. And if you want me to add anything to the cheat sheet, any more details, I'm happy to do that as well. Anyway, good luck if you decide to trade today. Hopefully we do see a trending day. It's always the easiest day to trade. And I'll see you guys tomorrow.